All right, what's up, everybody? So at the moment, everyone and their grandmother is talking about Dogecoin. So let's break down what's about to happen with Dogecoin. Is it going to continue pumping or is it going to go down? And where are the levels that you could buy in case it does a retrace? So let's start off on the daily chart because we always want to start off on the higher time frame rather than start off on the lower time frame. That's where you get confused. So higher time frame, let's take a look at this range low over here. So at the moment, right, for the last 90 days or so, Dogecoin has been trading between this range high and this range low. Now you can see that low has already been deviated and the sell side liquidity has mostly been taken, right? You have sell side liquidity there, you have a fair value gap over there, which got filled during this move. So let's just say that at the moment, right, just looking at the chart itself, there is no reason for the market makers to want to bring the price even lower to back to these levels, basically. That's highly unlikely, not completely impossible, but highly unlikely. And in trading, we always trade with the higher probability scenario. And at this moment, it just seems like Doge still has a lot of juice to continue upwards. So now that that's out of the way, let's take a look at this range, right? This is another thing that's going to support our theory. If you draw a fib from range high to range low, this is known as, well, this is the trading range that we've been working with on the daily chart. And if you look at price right now, it is sitting below the 0.5, right? And it's been sitting below the 0.5 for a fair bit of time. Now, what does this indicate? This basically indicates that price is trading in a deep premium at the moment. And the fact that it has been spending all of this time below the 0.5 for the last 3 months, actually more, if you just draw this, then it's been spending about 5 months below the premium, just accumulating. And you can see it in the form of this range, right? It's just been accumulating within this range. This tells us that the algorithms that are delivering price action, and by the way, these algorithms are owned by the market makers and the smart money. So it is no coincidence that Elon switched the Twitter logo into Dogecoin after range lows have been deviated, sell side liquidity have been filled, and then, it's sort of showing signs that it wants to go up. And then Elon posts about it and all the smart money is profiting. And I can tell you that just based on the chart, just based off of looking at the chart alone, it doesn't seem like it's going to end here, right? Sell side liquidity has been taken. We've been trading in a deep discount for quite a long time. So don't expect this to stop until you hit some kind of a premium. Now, this also indicates that any discounts, right? Any retracements are meant for buying. Buy the dip, basically. And at the moment, on the daily chart, you are forming this sort of fair value gap over here. Now, the keyword here is forming and not formed. This will not confirm until 15 hours later, so take this video with a grain of salt. But basically, if we simply draw a fib from this low to this high right here, and take a look at, let's say, the 0.5, we have an area of value, which is this bullish order block over here. So in the event that price does retrace back into this bullish order block, that's going to be a signal for you to go long and perhaps a stop below the order block. I would do a stop based off of a daily candle close below this order block because wicks are very easily manipulated. So if you can just wait for a candle body close, then that'd be that make a lot more sense. And that's how most of the smart money traders trade as well. So this would be the ideal target for a retracement for you to start buying. But this might not be likely because I'm sure you have seen cases where, price just literally pumps straight up without stopping at all. And for example, here you get another case, right? Price doesn't, it's not always that it retraces for you to get an opportunity. So to find any more opportunities, we're going to have to zoom into the 1 hourly chart to identify if there is anything else that we can take advantage of. So at the moment, one other thing, on the daily chart, right? This range high has been taken, right? Earlier on, I said that most of the sell side liquidity has been taken already, so there is not much reason for the market makers to bring the price lower back to there. But on the opposing side of this coin, most of the buy side liquidity has been taken as well, right? This high, you got this high, basically most of it has been taken other than, the premium, which is ultimately our target. So expect some kind of a retracement is what I'm saying. I want you to visualize the markets this way. Think of price as a fish, right? Something like that. All right, that's the fish. And the market here is the ocean. On top, you'll always have food lying around in the markets. And once the fish finishes eating, in this case, the food that is up top, it is very likely going to go for the food that is below before it goes back higher again, right? Very simple analogy, I know. So ideally, that's sell side liquidity, sell side liquidity, sell side liquidity. That's all food. Now, if I draw a fib on this fair value gap over here, we can see that this mean threshold here would be a very suitable target for a retracement before you pop, is what I'm saying. Now, there is also the chance where, given that this kind of a pattern, this is one of the things that I like to call a slow crawl up, whereby, you basically do a slow crawl up. This is never a good idea to fade, because most of the time, not every time, slow crawls up lead to explosion. So that is another scenario that could happen as well. So if you are feeling frisky, you could take a long right here, because this is a bullish order block right here. And you can see that price, after trading above this bullish order block, has returned into this bullish order block. So what you can do is take a long here, place a stop there, and just target 21% higher, which is going to be the next target, which is a daily fair value gap. But otherwise, this would actually be the game plan. If you're feeling frisky, just go long from here. And then on a 5 minute, literally most of the opportunities, for example, after you get the expansion, right? I want to point this out to you, because this happens all the time in the market. After every expansion, you always retrace. Remember that analogy about the fish. Once you eat the food up top, there is always food to be eaten down below. In this case, it comes in the form of a fair value gap. So this is a fair value gap that hasn't been filled. Notice how the candle bodies are mostly within the fair value gap. That's why I told you, if you are going to take the trade that I suggested down low on the retracement, you always wait for the candle body to close, right? Look at where the candle bodies are, because that is where most of the institutional volume is concentrated. Wicks are easily manipulated, and that's why you don't want to use them as much as possible. So this is just pointing out that most of the institutional volume is here, and bam. So food down here has been eaten, right? And then you get another expansion. There's a lot of food down here. Again, once the food has been eaten, you continue. Now, there is a fair value gap over here, which you can see price fills, and then bam. So at the moment, you have food here. Price has just eaten it, and price is currently showing a willingness to move upwards. How do I know that? Because you are getting big engulfing candles. Now, what are engulfing candles? Basically just a candle that eats up the previous candle before it, or even the previous next two candles before it. And the only time that you look for this is after sell side liquidity has been taken. So you see, liquidity has been taken. That is an order block. You could have went long there. Now, clearly this one would have been stopped out. So then now market makers are showing you another sign that it wants to go up. And so this is an order block. So literally it's as easy as placing a long, oops, stop there. And if you want to, just secure your profit quickly, that is a 3R trade. But ideally, if you target all the way at our high time frame target, you're going to get way more than 3R. In fact, you're going to get 30R, which means that if you risk 1% of your account, you're going to make 30% on this trade. Now, that is just a simple breakdown of Dogecoin, and hopefully this gives you a glimpse into my mind and how I like to think about trading. But for now, yeah, hope you enjoyed this video. Let me know if you have any questions, and I will be happy to assist. Cheers.